Good evening, everyone. Let me introduce myself. I'm Tommy from Phillip Futures, and I will be your host as well as the speaker for the second session of tonight's webinar. Thank you so much for taking time to join us for this event. With the theme Gold Trading Strategies Utilizing Price Movement with Technical Analysis. This webinar is also supported by CME Exchange, and we are very fortunate to have an amazing speaker, David Low, with us. Before we start, I would like to share tonight's agenda. We have 5 sessions: opening, main topic, second topic, Q&A, and closing. Now to keep things moving, let's watch a short company profile video from Phillip Futures.
Phillip Capital merupakan gabungan perusahaan layanan finansial yang didirikan pada tahun 1975. Kini, Phillip Capital telah tersebar di 15 negara dengan headquarter-nya yang berada di Singapura. Negara-negara lainnya adalah Indonesia, Kambodia, Malaysia, Thailand, Vietnam, China, Hong Kong, Jepang, Australia, India, Turki, Uni Emirat Arab, Inggris, Prancis, dan Amerika. Sebagai member dari Phillip Capital, PT Phillip Futures merupakan sebuah perusahaan pialang perdagangan berjangka komoditi yang berada di Indonesia. Phillip Futures telah bergabung sebagai anggota Clearing Indonesian Commodity and Derivative Exchange atau ICDX dan Jakarta Future Exchange atau JFX untuk ikut serta dalam mengembangkan perdagangan komoditas di Indonesia. Phillip Futures juga terdaftar di Bapepti atau Badan Pengawas Perdagangan Berjangka Komoditi dan memiliki izin penyaluran amanat luar negeri atau pasar berjangka asing. Dengan izin penyaluran amanat luar negeri, nasabah dapat bertransaksi lebih dari 100 produk seperti indeks, komoditi, dan mata uang di berbagai bursa global seperti SGX, CME, CBOT, NYMEX, COMEX, ICE, APEX, HKEX, IFSG, dan DGCX. Misi dari Phillip Futures adalah membantu nasabah untuk mencapai kesuksesan finansial di pasar komoditas dan derivatif. Phillip Futures, bringing global markets closer to you.
Okay, after that, I'll share a bit about our company and its global coverage. As a member of Phillip Capital, PT Phillip Futures has been registered clearing member of the Jakarta Future Exchange (JFX) since 2005 and has been registered as a clearing member of the Indonesia Commodity and Derivative Exchange (ICDX) since 2010 to participate in the development of commodity trading in Indonesia. PT Phillip Futures is registered with and supervised by Bapepti. Globally, we are present in 15 countries with our headquarters in Singapore. We proudly serve over 1 million clients, manage shareholder funds of $2.5 billion, and oversee assets amounting to $35 billion, supported by a team of our 5,000 professionals. And then, let's welcome David Low to kick off the first session.
Thank you, Tommy. Okay, let me switch on my camera. How are you? Everybody there?
Yes.
Good evening to everybody. Now, let me share my slides. Just give me a second.
Please.
Okay. There you go. I'm sharing. Okay. Is everybody seeing my slides very clearly?
Very clear, David.
Okay, thank you very much and welcome to this evening's webinar where we will be talking about CME gold trading strategies and how to utilize price movements, analyze how the market moves with technical analysis. So this webinar is slightly different from normal Outlook webinars. This webinar is where we actually learn how to go into the market, how to get out of the market, how to put your profit taking, and how to do your stop losses. Okay, so this is, I hope, a very exciting thing, and we will apply the techniques all on gold trading this evening. Okay, we will have a Q&A question and answer session later. You can all put your questions into the chat group, and myself and Tommy will take those questions at the end of the webinar. Right, so let's move on. Okay, first, disclaimer. Okay, this presentation and webinar tonight is for general information. This is not a recommendation, an offer, or solicitation to buy or sell any of the derivative products that you see here tonight. If you want to take action on any of the ideas that you see this evening, please talk to Phillip Indonesia, and they can help you and advise you on how to go about trading the futures. Next, okay, this is myself. Okay, I'm currently the managing director of Top Infinity, which is a proprietary trading firm that trades a whole range of financial markets, including global commodities. We trade currencies, we trade equity indices, and all sorts of financial derivatives. So we have a team of full-time traders, which I'm managing this team of traders. Over the last 25 years, I've been in this business of derivatives and futures and options. And I've held a few leadership positions in the futures brokering divisions in a few of those what do you call that, investment banks. All right, so that's a quick look at who I am. Okay, let's jump into what we will learn this evening. Okay, so this is what we will be sharing this evening. The first, of course, is to understand and talk about the trading opportunities available in CME gold contracts. Okay, so we want to know a bit about the gold contracts. I will point to you some of the very important points to note in terms of trading CME gold contracts. Then later, before we jump into the technique of how to go into the markets, how to enter markets, how to see the trend, first, I would like to share with you some ideas and discover for yourself what kind of trader are you, okay, to choose the right trading style for yourself. Because a different trading style will actually determine what sort of charts you should be looking at, especially what time frame of charts you will be looking at. Right. After that, we look into the trend trading setups. We look at day trading setups. We look at swing trading setups, and also, if you like to position trade, okay, how do you do position trading for gold? Right. I will also go into some live charts because the markets are currently moving. The last 1 month for gold has been a very exciting time. We have seen gold move to new highs this month. Of course, there are a lot of developments happening in this world, and it's impacting the price. And let's see how to trade the gold product using charts this evening. Okay. Before we go into the charts, let's look at some of the gold contracts traded on CME. Okay, now this is the main gold contract called the GC contract. The GC contract is the main benchmark contract for trading gold in CME. Right, this is the contract, the futures contract, which is the benchmark for futures contracts in gold prices. So if you're looking for where is the gold price at this moment, the CME gold contract, the GC, is where people will reference to where the gold price is at the current moment. Every single day, this particular contract trades about 25 million ounces of gold. So it's a very, very liquid and very, very active contract, right? For those of you, some of you may be trading gold in terms of physical gold. Some of you buy physical gold, right? Some of you buy gold coins. Some of you buy gold bullion. Some of you even buy mining stocks as a way of trading gold prices, okay? But one of the most direct way to trade gold is actually to go into the futures contract. When you're trading the futures contract, you're actually trading directly the gold price moving at every single second, okay? And this gold contract, the GC, is a 100 troy ounce contract. The size of the contract is 100 troy ounce. Okay, 100 troy ounce is quite heavy. Okay, it's about, if I'm not mistaken, it's about slightly over 2 kilos of gold, right? And you have 24 hours access to this gold market, or almost 24 hours. It trades around the clock, and it's a very active also in the Asian hours. About 40% of the volume traded on this particular contract is traded during the Asian hours. So it's a very, very favorite contract among the Asian traders as well. Okay, so let's look at this current contract spec here, right? So we said just now the contract for gold GC is 100 troy ounce. So every time you buy one contract of GC, you are actually trading 100 troy ounce of gold, right? The minimum tick, that means the minimum price movement is 10 cents per troy ounce. And each of these 10 cents per troy ounce is worth 10 US dollars. Okay. Now, what this means is this: every $1 move in gold, because this is a 100 troy ounce contract, up and down by $1 means up and down by 100 US dollars. Right. So this contract, you can see it trades mainly the current calendar month and plus the next 2 calendar months, right? And within the 23-month period, it has a 23-month period of February, April, August, and October contracts. So these are the contracts that is available to trade at any one time. And the margin, okay, how much do you need to trade one gold contract in GC? You need 10,000 US dollars, okay? So to trade this particular contract, each contract you require 10,000 US dollars. Now, some of you may say, wow, okay, 10,000 US dollars is quite a lot. Okay. Now we have another gold contract, which I'm going to show you now, called the micro gold contract, or the MGC contract. Now, this contract is 1/10 of the size of the contract just now. The big brother is 100 ounce. The micro gold is 10 troy ounce. So this particular contract moves the same way as the gold prices, because gold is priced in per troy ounce basis. This is just a smaller contract, 1/10 the size of GC, and the margins you can see right over here is only 1,000 US dollars, right? To buy 10 troy ounce of gold. Okay, currently the price of gold is around 2,500 US per troy ounce. So 10 troy ounce means it's worth 10 times 2,500, which is 25,000 US dollars. Now you only need 1,000 US dollars to trade a $25,000 worth of gold. Okay, so this is what we call in futures, this is called leverage. Okay, so you use a small amount of money to control a large amount of exposure. So this is a very powerful concept in terms of trading futures. Right, so these are the two main gold contracts that we will look and talk about this evening. Okay, and now before we get into the charts, let me show you an example of how to calculate the profit and loss for trading gold contracts. In this example here, we are looking at trading a bullish market. Okay, let's say, for example, you're bullish on the market, you feel that the trend of gold is continuing to go up. Okay, what you can do is you go and buy one contract of GC. This is a large contract. Suppose you buy one August gold futures contract. Let's say, for example, here trading at 2,400 US dollars. And remember, each contract is 100 troy ounce. Okay, let's say, for example, you go in at a price of 2,004. Okay, so you're trying to expect the market to go up because you're bullish. Now, scenario one, if August gold futures were to rise to 2,450. Okay, that means you have a 50 US dollars gain, right? You went in at 2,400. Now it's 2,450. You have a $50 per contract, what do you call that, profit. Okay, you need to multiply the 50 by 100 troy ounce, because this is a price per troy ounce. So 50 US dollars per troy ounce multiplied by 100, you get a profit of 5,000 US dollars. Okay, later we will see what is the daily movement of gold. Okay, daily movement of gold is actually between 20 and even up to 60 US dollars per day, right? So this actually $50 can be a single day movement. Okay, now if you buy gold, and of course if gold prices were to go down, then you would have a loss. So in this example, in scenario 2, if August futures, gold futures drops to 2,350, then you have a $50 per troy ounce loss. multiply by 100 ounce, then you would have a $5,000 loss, right? So this is important to note as well. In buying, selling a gold, there's profit opportunities, as well as you need to be able to control your losses as well. Okay, so this is just one example of a bullish market scenario. Let's now go to a bearish market scenario. Okay, if you feel that currently gold has reached a very important resistance point at around 2,500, okay, you feel that for the short term, gold is going down, what you can do is you can short. Okay, so in the futures contract, you can take advantage of a market going down. So you can go short. Okay, and in this example, you are shorting the micro gold futures contract, the MGC. And remember, the MGC is a 10 troy ounce contract, smaller than its big brother. So let's go short on 1 August micro gold contract. Let's say, for example, at $2,400 per troy ounce. That means you're looking for the price to come down. So in scenario one, if August micro gold futures drop to 2350, okay, you sold at 2450, it comes down to 2350. You have a profit of $50 per troy ounce. Okay, and remember, this is a 10 troy ounce contract, MGC. You need to multiply $50 multiplied by 10. You get a $500 profit. Okay, so although market is going down, because your view is market going down, you will profit from a falling market. Of course, if you short the market and if the markets were to go up, then you will have lost. So in this scenario two, actually, sorry for the typo over here, scenario two, if August micro gold futures rises to 2450, okay, your short position will have a loss of $50 per ounce. Okay, so you would have a loss of 50 multiplied by 10 ounce, which is minus $500. Okay, so this is two examples of two scenarios in trading gold. One is on the bullish side and one is on the bearish side. All right, so this is just to give you a bit of a warm up on trading gold and how the profit and loss are calculated. Okay, now let's talk about finding your trading style. This is very important, okay? Every trader has a different style, okay? Just like everybody has a different personality. So in trading, find your best style, find your best type of time frame to trade. Later, we'll cover different time frames, okay? And we'll see each particular time frame, the movements of gold prices, right? Now, a lot of people like day trading, okay? So day trading is what a lot of people like to do. And day trading, I think, is something which is especially good in terms of those in the Asian hours, because a lot of our traders are either full-time employed or they have a full-time business, right? So during the daytime, you may be working, okay, and or doing your business. But the gold trading in terms of the market during the US time is actually very, very active in the US time. So it's perfect. And previously, when I was before I retired to become a full-time trader, I was also working full-time. So I cannot trade during the daytime. So I trade after work. And during after work, let's say, for example, after 6 p.m. Malaysian time, okay, or 5 p.m. In Indonesian time, then I will go and look at the setups for gold trading. I trade gold, I trade crude oil. So after work is the perfect time for you to do day trading. And because the movement of gold is very, very active during the US hour, and it's also the hour after probably your work or your business, okay, then it's actually a perfect way of trading. So day trading is very, very popular, okay, in terms of gold trading because of the volatility. It's basically a strategy that you buy and sell throughout the day. Throughout the day, basically meaning during the active hours. You don't hold the position overnight, okay? So you only hold it, some day traders hold it for a few seconds, okay? Some for a few hours, but you don't hold it to the next day, right? You don't extend your position after the market close. So that's what it means by day trading. So all day traders will close their positions before the closing of the day's trading. Okay, so the objective of a day trader is to benefit from the daily short-term fluctuations of these gold prices. Okay, and when you're looking at day trading, you'll be looking at the charts between 1 minute to 60 minutes. Okay, so if you're very short-term, you'll be looking at 1 minute. Okay, I actually don't encourage you to look at 1 minute unless you're very expert in day trading. Most of the gold trading myself, I use charts between 15 minutes to 60 minutes. Okay, so this is very important in terms of day trading. You must choose the correct time frame to do your trading. Okay, so in terms of my favorite, what do you call that time frame? It's either the 15 minutes, 30 minutes, or the 1 hour for day trading. Right. So now let's move on and talk about the next style of trading. The next style of trading is swing trading. Okay, swing trading is a style of trading where you hold a position for a couple of days, sometimes even for several weeks if the market is going your way. Okay, so you look to try to capture the short to medium term gains. So you're trying to catch the swing of the markets. Okay, whether it's a downswing or an upswing, you're trying to catch the turning points of the market. Whereas in day trading, you're actually trying to catch the momentum for that particular few hours. But swing trading, you're trying to catch the turning points. Okay, so that's why it's called swing, right? Just like the little girl over here is swinging up and down. You're looking for each of the swing and you're trying to catch the turns in the market, right? And of course, it's still a short holding periods. Okay, unlike if you're trading stocks, you may be looking at weeks, months, or even years in holding that stock. But for swing trading, you only hold it for a few days, or at most several weeks, right? And what is the chart time frame you need to look at? Okay, for those of you who want to do this swing trading, then you'll be looking at the smallest time frame is 60 minutes. Okay, 60 minutes is good for 1 or 2 days, or daily, which is good for about 20 days or 30 days of trading. Okay, so you can see from here, day trading and swing trading, there is different time frames and different types of time frame charts that you're looking at, right? Now, there are other styles of trading as well. Okay, so we spoke of day trading. Now, this particular chart will tell you what kind of trading style and what kind of persons, okay, what type of personality on the right side, what type of personality is best suited for different types of day trading, swing trading, position trading, or scalper. Scalper is the fastest of the day traders. Okay, later I'll cover a bit on this. So for day trading, the characteristic, of course, we talk about it, is about quick decision making, okay? Because you're making a decision based on 1 minute charts, 5 minutes charts, or at most it's 60-minute charts, okay? And you tend to be looking at technical charts, okay? So very short-term traders always use charts because the charts give them the best timing signals, okay? Compared to very long-term traders, of course, they can use fundamental data. So holding period is same day, okay? What is the strength of this particular trading style? Basically, you need to be able to trade under pressure. Okay, if you like day trading, of course, because you are able or need to make decisions all the time. Okay, so you need to be able to thrive under pressure. You need to adapt very quickly. Okay, so that's the day trading style. And if you like this style, consider this if you enjoy fast-paced trading. Okay, so you like fast action, you like fast movements, then you look at day trading. Now, for swing trading, okay. You need a bit more patience, okay? Because you're looking at major trend in terms of the swings, you're looking for trend identifications. So your holding period, we said just now, from a few days to a few weeks, you want to be able to spot the medium-term trends. So you have good in looking at trends, and this is the style that you want to adopt, okay? So this is for people who want a balance between speed and also ability to analyze the market. Okay, so for the day trader, it's momentum, right? For the swing trader, it's about trend and it's about a balance between fast and analysis. Now, for the position trader, okay, position trader is of course long-term focus. Okay, he's looking at the long-term trend. Okay, looking at fundamental information. Okay, what is happening around the world? What impacts his position? He could hold a position for months to years. Okay, and position trading, unless you're a very long-term trader, quite not many futures traders adopt this particular style, because position trading requires you to hold a long-term position. You need to roll forward your position for many months. Okay, so a lot of futures traders, you find themselves trading with the first two styles, or even the last style called the scalper. Okay, so position trading is for those who like macroeconomics, who are very patient, and you're very comfortable with longer trades, right? Now, the scalper is the what they call that. This guy is the fastest in the market, okay? And it requires you to have very fast decision making, very short-term focus, right? Your time frame is seconds to minutes. Okay, so some of these traders go into looking at this price chart. Okay, very fast price chart, probably 1 minute. Okay, and you must be able to handle high frequency trading because you're doing a lot of trades. Okay, one day you may do 20, 30, 40 trades. Some of our traders also do that as well. Now, if you like this and you are a person who's very fast, you like the small details, then this is the style that you will trade as a scalper. Okay, but I would like to emphasize that if you are a scalper or even if you are a day trader, you need your skill to be pretty good. Okay, yeah. So a good balance is actually a swing trader where you hold your positions for a few days, right? So for those who's just starting out trading in futures, swing trading may be a style that you like as well, right? So these are the various styles. So you have to decide for yourself what is a good strategy for yourself and what is suitable for you, right? So after knowing this, let's jump into the work for today. How to read the market trend. And this is very important. You will need to be able to know the trend and trade with the trend. Okay, as good traders, you must follow the market. Where the market wants to go, you must follow it. Don't go against the market. Okay, so let's see how to read the market trend. And for this evening, when you finish this particular session, you must or you will be able to read a chart very fast using your eyes. Okay, I'm going to share with you a techniques that can use your eyes to read the trend. Be you need to have a chart. Okay, but quickly, if you practice the method, you'll be able to read the chart in less than 10 seconds. Okay, so that's something that you will be able to do after this class. Okay, so let's move in. We will talk about how markets move in terms of wave. Okay, and the father of wave theory is actually this gentleman called Elliott Wave, and he's the one that founded the Elliott Wave theory. Those of you who study technical analysis are very familiar with Mr. Elliott. Okay, he's basically the one that said that the market is very orderly and the market moves in waves, and there's a law to it. There's a law to this how the waves will move. Okay, and so even this is Elliott Wave is actually during the 1930s, and in the 1980s there were this new theory come up called the modern chaos theory, which basically says that although you see the market is like very disorderly, but actually very chaotic, but actually there's actually high order. There's very systematic move in the market if you know how to see it. Okay, so this evening we will try to see how to see the market in a very systematic way. Okay, and basically the market is what we call fractals. This is a theory that we will talk about afterwards. Okay, and how to use the fractals to read the market. Okay, now first we need to get into a few basics of how to read the trend. Okay, now if you see the chart at this right side of the screen, if I ask you this question, what trend is this? Okay, and I think within less than 2 seconds you can answer this is the uptrend. Okay, of course this is the uptrend, right? And markets actually move only in 3 ways: uptrends, downtrend, and sideways trend. Okay, and what is the characteristic of an uptrend? Okay, the characteristic of an uptrend is the market that is moving with higher highs. You can see the high is moving higher and the lows are moving higher as well. So if the market is moving with higher highs and higher lows, this is what we call a bull market. Okay, and because your eyes can recognize this pattern so easily, that's why you can immediately see, hey, this is an uptrend. Okay, now later we will see what is important is where to see the turning point. Okay, that is a very important thing. This is very obvious. Everybody can see, I think all of you will have no problem seeing what trend this is, right? Now, if I flash the next chart, I tell you in 2 seconds, also you will know how to see the trend. What trend is this? Obviously, it's a downtrend. Okay, and what is a downtrend defined as? A downtrend is defined as a market where the highs are getting lower and the lows are getting lower as well. This is a very important definition. Later, we will use this definition of a bull trend and a bear trend, and we'll sing the song of the bull trend and the bear trend. Okay, and the third way of moving is, of course, sideways. Okay, now sideways market, a lot of traders don't like this because it's not going anywhere. A sideways market is where there's a very well-defined high. You can see a high. You can draw a line across the tops of the trend, and you can also draw a line across the bottom of the trend. So this is sideways. It's got a very well-defined range as well, right? So if you're a trend trader, you will find difficulty in trading this because every time you feel that the market is going to break the high and move, it doesn't move upwards, it comes back down, and you think it's going down, it fails to break the low and goes up again, right? But of course, a sideways trend, you can also trade within the trend. Okay, there are techniques to do that as well. But this evening, we will be talking about how to trade a market trend. Okay, so we will not stress too much on a sideways trend. Okay, so for those trend traders, the sideways trend is where a lot of traders also lose money because there's no trend for them to trade. Okay, but for a sideways trend, you want to watch the movement, okay? Because a potential breakout of the high and low, okay, if there's a very decisive breakout in the high and lows, then the trend will move in a very, very strong movement. Let's say, for example, if the market moves like that and then it breaks the high, it goes above this, then you will see a very, very strong move coming from there. Okay, so these are the three ways where the market can move: uptrend, downtrend, and sideways trend. Now, the biggest question, the most important question is, how do you identify when the market is going to turn? Okay, so a lot of trouble comes in when the traders do not know the market has turned. So if you feel that it's a bullish market, every time it comes down, you buy. Every time it comes down, you buy. It makes money. But there will be one time when the market turns, and if you buy, it will continue to go down. So now let's look at this very important few slides. The next few slides is the one that you want to burn into your mind, on your brain. Okay, so how to identify the reversal? The first thing that we want to see is, how does a market go from an uptrend into a downtrend? Okay, so this is where I want to show you. Remember over at this part on the left side of this high, you have uptrend, higher, higher low, higher low, higher low. No more higher high. Okay, so the song has changed. There's no more higher high. Okay, and then it makes a lower low. Okay, when it makes the lower low, that means the song has changed. It's changed from an uptrend to a downtrend, and this is a very important pattern to burn into your mind. Okay, and we will see this pattern again and again in the charts that we are going to see coming from here. Okay, let me show you another slide. Okay, so this is where uptrend is. Every time you have an uptrend, if you buy on a dip, the market will come back up. Okay, so very easy in the uptrend, right? Every time it comes down, you buy, it goes up. Okay, and then if the market turns, if you buy again over here, then you find that, hey, it goes up a bit, but never go up above this high. So if it doesn't go up above this high, then come and break this low. This particular price point is where it's a trigger for a turning in the trend. This is the signal, okay? When it breaks through this price point, this is where you will take profits on your buy, and you either go short, okay, for a new trend, because now it's going to make new lows, okay? So this is a very important pattern to recognize. Let me go back again. This is the pattern that you want to learn by heart, okay? Where an upturn turn into a downturn. Now let's look at how the market turns from a downtrend to an uptrend. Okay, so you're looking for buying opportunities. So obviously here we are seeing the market that is going downtrend. You have market that's a lower high, lower low, lower high, lower low, lower high, lower low, lower high, no more lower low. Okay, so the song has changed. No more lower low. If it's lower low, then it's still downtrend. But now there's no more lower low. Instead, you go and break a new high. Okay, it breaks this high and make a new high over here. The music has changed. The trend has changed from a downtrend to an uptrend. And this is what we call the turning point. Okay, when the market fails to break a new low, but instead takes out this high over here. And this is where the trend change. If you are shorting the market, okay, some markets were on the way down, then it turned. This is the turning point that you want to see. Okay, so if you see this particular point and it breaks this particular point, okay, this is where the market has turned. This is the signal to lock in all your profits from your bearish market and then go long from this point. This is what we call the stop and reverse buy. Okay, you stop all your sales, you now stop and reverse buy. Okay, so these are the two very important patterns to understand. And now I will show you some examples of this movement. Okay, so this is a gold futures chart, weekly chart. Okay, and basically I'm circling a few of the turning points, but there are also all the other turning points over here. This is the turning point for market going up, then turning down. You can see make new high, come down, doesn't make a new high. Okay, different song already. Then it breaks low, and then it comes down and comes down. And over here, you can see, it makes a lower high, but doesn't make a new low. Okay, then this is a signal again. Although I didn't circle it over here, but this is actually a turning point. So this is a turning point for sideways up market to downwards. This is a down market upwards. Okay, you can see all the patterns over here. And this is the rule of the charts. This is the movement. Okay, this is the wave movement that Ralph Nelson talked about. Okay, markets move in waves. Okay, so for those of you in Indonesia, if you are closer to the sea, if you're in Bali, you can see the waves coming in. The high tide and low tide, it obeys the same kind of rules in terms of waves, right? So if the high tide is coming in, you will come in nearer, then go out, come in even nearer, then go out, and come in even nearer, then go out. It's the same thing, right? So when it changes tide, then you will go low, come back down lower, and then go further out and come back and further out and further out. So it's the same rule in terms of looking at waves. So market moves in the same way. Let's look at the daily chart. Okay, so in all time frames, whether it's weekly, daily, hourly, 15 minutes, this is the law of the market. It will move that way, right? So here you see one of the turning points which I've circled. Okay, then the market go on uptrend, and then okay, you have a turning point right over here. It moves down, then it moves sideways. There's also a turning point right here, upside. Okay, another turning point right over here. Okay, if you're smart with your eyes, if you're trained, also you will see a downtrend over here. But this is more of a sideways trend than a downtrend, and then up again. All right. So this is updated until last week. Okay. Of course, gold has gone to new highs already. So this is a daily chart. Can we even see it in the hourly chart? Of course, okay, because this is again a law of the charts, the law of movement of waves. You can see it in hourly charts as well. And later when we go into 5 minutes charts, 15 minutes charts, we can see this pattern as well, right? So these are examples of how you must be able to use your eyes to read it, okay? Now, there's other indicators as well, which I will share with you later, okay? But yeah, your eyes need to get used to this wave movement. All right. So this is the summary of how the charts move in terms of the trend and how you see the wave-like movement of the gold chart. Okay. Okay, now I'm going to share with you this master key to charts. Okay, and the master key to charts is there are a lot of patterns in charts. What we are covering today in terms of technical analysis is we're looking at chart patterns. Okay, how to read chart patterns. Of course, in terms of technical analysis, there are many techniques. Right? There's moving average. There's RSI. Okay, there's of course Elliott wave, momentum, and all that. Okay, but today we want to have a simplified way to look at charts, and I'm also sharing with you these things that I use on a daily basis. Okay, this is not just theory. This is something that I use every day to trade. Okay, it's a simple way to trade, and it's a very effective way to trade. Okay, so I'm going to share with you the master key to charts, and this master key is called the fractal. Okay, so what is a fractal? Okay, fractal indicator is a indicator by Dr. Bill Williams. Okay, so how do you display a fractal chart? Okay, So if you're using things like TradingView, if you're using some of the charts, I think Phillip has also, it's got what we call the fractal indicator. So you go to the Bill Williams fractal indicator and can use it as well. Okay, you don't have to recognize it by your eyes. Okay, but if you can recognize it by your eyes, it's basically this pattern over here, which is a 5-bar pattern. Okay, 5-bar pattern. These arrows here are showing what we call the fractals. Okay, so 5 bars is like your hands. If you put your hands fingers right in front of you, the middle finger is what we call the up fractal. If you put it down, okay, your middle finger, the longest downwards one, that is the down fractal. Okay, so a fractal needs to have at least 5 bars. In the middle, there should be 1 bar that's higher than the rest on the left and the right. Right? So it must be a bar with 2 preceding and 2 following bars with lower highs or higher lows on the down move. Okay, so let's have a look at how this looks like. Okay, so these are up fractals. Okay, these bars can be daily bars, can be 5 minutes bars, can be weekly bars, but every time you see a 5-bar move and then there's a high or low, there's what we call a fractal. Okay, so these fractals can be displayed by your technical analysis software. Okay, if they don't have, then of course you will need to recognize with your eyes. Okay, and it's not difficult to recognize with your eyes. Right, so these are the fractals. Different of types of fractals. The green one are the up fractals. The red one are the down fractals. Okay, we move on. Okay, so this is a chart with the fractals put on it. Okay, so this is a chart of gold futures daily, right? And we have all the fractals been drawn up by the TradingView. This is a TradingView chart. Okay, it's automatically drawn for you. Now, what you can see over here is if you join this red with the green and the red with the green and the red with the green, okay, and the red and the green, you will see the wave. Okay, so within this is actually the wave. Within all these fractals are actually the wave. Right? That's where the wave theory is. Okay, so this is how you identify fractals, by displaying it on the charts using the indicator selection, or you look using the 5-bar move. Okay, so how do we trade the fractals? Okay, so we are going to go into it now. How do we trade these fractals? Okay, now, the fractal entry system, what kind of system is this? Now I'm sharing with you a buy and sell, entry and exit system, okay? We want to have a system that's simple to identify, okay? You can identify it in less than 10 seconds if you practice, okay? You need to practice. No sophisticated technical analysis software. Actually, if you can display a chart, you already can read the fractal. It's quite easy to master, but it needs to practice. You need to practice, right? So some people say riding a bicycle is very easy, but you still have to practice initially to master it, okay? And what you'll do when you do this fractal entry and exit system, you'll be trading with the trend, okay? You will be definitely with the trend, okay? And you can also catch the early signals, okay? The very early trend signals, you can also catch that, okay? And it's very versatile. You can apply it to all markets and all time frames. Although this evening we will be talking about the fractals traded on gold, you can also use this system. It's universal. You can trade indices, you can trade stocks, you can trade commodities with this system as well. Okay, so learning this system, you'll be able to trade all types of commodity or futures contracts. Okay, so let's jump into the action now. This is how you see a buy signal. Okay, so markets have come down. Okay, down to A. Okay, it goes up to B and then come down to C, then form this fractal. Then you will see this fractal being indicated. And at this particular point, this high of the fractal, if the market trades through, okay, trades through this B, okay, by at least one tick, okay. Let's say, for example, if this is 2004 and it trades 2004 and one tick above, then it is a buy signal. Okay, very simple. Okay, look for a up fractal. If it breaks the up fractal, you buy. Okay, give you another example right over here. Okay, this is the gold chart. Okay, this is the up fractal. When the market trades through the up fractal, and this up fractal is 2053. If it trades to 2054, it's confirmed signal. You buy at this particular bar. Okay, then market moves up again, come down, okay, form some sell fractals. There's actually a sell signal here, but I will not indicate. Okay, when it breaks up again this up fractal over here at this bar, you go in and buy. Okay, and then another fractal appears. When it breaks this bar, it's another added buy signal as well. Okay, so these are some of the buy signals coming from fractals. So every time it breaks an up fractal, it's an opportunity to buy. Okay, and of course, if it breaks a down fractal, it's an opportunity to sell as well. So for here, if you see this particular formation, this break, you actually lock in some profits. Okay, but this is a daily chart. This is for swing traders. So you basically have been holding the position since March to end of April. Okay, you can see, right? So this is for swing traders. That's why we said for swing traders, you look at 60-minute charts or daily charts, right? Let's give another example. If you can see another example over here, this is weekly chart. Of course, this is a very long-term chart. Now, this is for people who trade position charts. Even in weekly charts, you can see right over here, when it breaks the up fractal, it's a buy. Okay, it breaks again this particular up fractal, it's a buy, and right here again, and a buy, up fractal, you buy. Okay, so these are some examples. We will go into live charts afterwards to look, so you can ask questions on how you read this chart. I'm going to share with you the sell signal. Okay, this is the fractal sell signal. That means the market has been going up. Okay, so if you're bought over here, you'll be looking for opportunity to sell or take profit. So market goes up to A, then comes down to B, right? After creating a low at B, it tries to go up to C. It doesn't break A. A forms a fractal because there's a 5 bar over here, forms a fractal over here, and you draw a line right across and see what is the price. Let's say the price is 2005. Okay, so if market trades through below 2005, then you have a sell signal triggered right over here. Okay, I'll give you one example. Okay, this is example. Market goes up, come down, and forms a fractal right over here. This is the arrow. And when it trades through right over here, it's a sell. So you put in an order when it trades through right over here. And usually what order we put is we put a stop entry signal. So if it trades through this price is 2007. If it breaks to 2006, it will sell. Okay, so this one is a good signal. You sold and you have quite nice profit from 2007. Actually, after a few days, it dropped to 1954. So this is quite a lot, right? This is like 45 plus 7. This is 52 points, okay? 52 points. If you are trading the GC, 52 points is $5,200. This particular a few days move is already $5,200, right? So again, another sell signal over here and multiple sell signals. Okay, as it breaks the low, you'll continue to sell. Okay, and right over here, you can see if your eyes is good and you practice, this is a buy signal already. So you want to be taking profits here as well, and then you go on the upside. See whether we have another examples. Okay, this is a weekly chart. Okay, this is very clear as well. Okay, market makes a high at about 2000. This is a chart from December of 2021, 1 year to December 2022. At that time, gold was showing some weakness. Okay, it also was over here March 2022 that all commodities started to tumble. Okay, oil, soya oil, everything started to drop right over here. Okay, basically due to the scare of a recession or a scare of the China economy turning down. So everybody was basically fearful and everybody was selling right over here. So there are multiple sell signals here as well, right? You can see all these sell signals over here. Down fractal, broken over here, down fractal, broken over here. These are sell signals. Okay, so we will go into the live charts and please ask some questions, okay, if you're not sure how it is, okay. But before we get into the live charts, I want to share with you where to put your stop loss. Every time you trade, you need to have a stop loss, okay. Very important in terms of trading futures. Always have a stop loss with you because this is like your airbag, okay. Just like driving a car, you need to have an airbag, okay, just in case accident. Okay, so if your trade is wrong, okay, you have a stop loss strategy to stop your losses, not let the losses continue. Okay, so this very important rule when trading futures, always have a stop loss strategy. Okay, what does the stop loss strategy do for you? The stop loss strategy do actually preserve your capital. Okay, so sometimes we are right, sometimes we are wrong. Okay, we are right more times than wrong, then it's a good strategy, right? So when we are wrong, we want to preserve our capital because the winners will come later, right? So if we lost all our capital, then even when the winners come for your system, you won't have the opportunity to trade anymore. Okay, so always know where do you want to exit before you enter, and I will show you where you can find your exits even before you enter the market. Okay, so always treat your stops, never exceed more than 2 to 5% of your account balance in terms of your stop loss strategy. Right, it's very, very important to have this stop loss strategy, and this is how you have a technical stop loss strategy in trading fractals. Now, let's say, for example, you have buy signal triggered. So you go and buy right over here, B+1. Now, where should you put the stop technically? Okay, in terms of technical stops, you put it actually either A or C. Okay, A or C's are fractals. Okay, so if it breaks A, that's where your stop is, and this is where from A to B, this is the amount of risk that you are taking, right? So some of you don't like too much risk, can take C as your stop loss. Okay, so you have a tighter stop loss, okay, between B and C. So you can have a choice between putting below C or below A, depending on your strategy and your ability to take risks. Now, the question is this, because we already said already, if market will move down below the down fractals, is a sell signal. So you actually, it's technically a sell signal, so you want to get out anyway, right? So this is a stop loss for a fractal signal buy. And this is a fractal signals sell where you want to put the stop loss. So let's say, for example, if you feel that the market for gold is now going to a correction after hitting 2005, okay, it's coming down. So let's say, for example, you have a what do you call that then? A signal to sell here at B. Okay, after you sold, where is your stop loss? Okay, so you have two choices. You can have C fractal or A fractal right over here. Okay, if you are more conservative, then you can put a C fractal stop loss, or if you are more aggressive, then you can have a fractal stop loss. Okay, so you put the stop loss above A and above C. Okay, so that's how you define the stop loss for a fractal trading system. So once you see the entry and exit system, you also have, okay, the stop loss where you want to put the stop loss. And this is very, very important to have. Okay, every time you enter the market to trade, always trade with a stop loss. Put your stop loss into the system. All right. Okay, now we are going to some live charts. But how to master this? You have to practice. Okay, you have to train your eyes. Okay, this is actually drawing in my bathroom. Okay, because my wife wanted to learn how to trade, so I say, okay, you want to learn how to trade, you need to practice your eye, how to recognize the trend. Okay, and you can see over here it's actually an uptrend to a downtrend, right? So higher high, higher low, higher high, higher low, and then the break is a sell. Okay, so this is actually a picture from my bathroom. You can see my shower over here. Okay, so we are doing this for real. Okay, not play, but practice. You need to practice to see the pattern in your eyes. Okay, and embed that pattern in your mind. Okay, once you have it, you will have it forever. Okay, it's just like riding a bicycle. So once you know how to ride a bicycle, you will not fail to be able to ride the bicycle the rest of your life. Okay, so this is a very important pattern to have in your mind, because once you have it in your pocket. Again, you have your system in your pocket. Okay, how to read the market, you already have it in your pocket, and that's very, very good. Okay, now what we're going to do is we are going to go into live charts and see how to practice these fractals. Okay, so keep your questions coming. Okay, please put your what do you call that, your okay, I'm going to share some screen right now. Okay, to just hold on a second. Okay, this screen, I hope you can see. Okay, so this is a 1 hour chart. Okay, so it's 1 hour chart of the gold futures. Okay, so now what is the signal of this market? Okay, this is currently at this time. Okay, let me draw you a chart. Okay, so the latest signal for today is actually right over here. Okay, I draw this red line. Okay, and the signal was triggered when the market moved through over here. Okay, so 2546 right over here, there was a sell signal on the hourly chart. Okay, so we will have to see over the next couple of hours or the next one day where the markets are going to go. Okay, so let's say, for example, if you shorted, you sold right over here. Okay, you sold over here, where is your stop? Okay, so your stop loss is either here, which is a C, and this is a A. Okay, just now we talked about A and a C. Okay, right over here, let me draw. Okay, this is a A. Okay, right over here. Okay, this is a A stop, and right over here, okay, this is a C stop. Okay, so this is a C we talk about. Okay, this is a C. Okay, so you enter right over here at this bar, you sell right over here, and your stop loss is over here. Okay, C or A. Okay, so this for the hourly charts. Currently, okay, of course, there's now a possibility that if you shorted, this may be a buy signal, okay, but it needs to trade through this signal because you buy. So if you are currently now in this, what do you call that, this part of the market, you will move your stop loss down to this point here, okay. So if I were trading now, this will be my new stop loss, okay. So as you come down, all the new buy signals is your stop loss. Okay, it's also your new signals to go buy as well. Okay, now what about, let's go into a smaller time frame. Okay, let's remove the drawings. Okay, currently let's just remove the drawings. Okay, and we go into a 15-minute chart. Okay, going to even a shorter term chart. Okay, now of course, when I ask you what a time frame is this is of course a short time frame. Okay, now let's look at some of the signals available on 15 minutes today. Right, so in the afternoon, you actually have a buy signal right over here. Okay, right over here, which was triggered at this price point. Okay, this one we don't want, so not to confuse you. Okay, so this is a buy signal right over here. The price was 25544.8. Okay, and the market actually moved up to a high about 2552. Okay, so 44 to 52, that's $8 US move. Now, $8 US, how much is the $8 US move? If you are trading the MGC, 8 times 10 ounce is $80 US. Okay, so this particular move is only 1, 2, 3, 4, 5 bars. Okay, 5 bars is only slightly over 1 hour. Okay, you already have locked in about $80 US. Okay, so if you are a day trader, you will trade this way. Okay, and there's another bar here to sell. Okay, if you didn't take profit away, here is a sell signal right over here. Okay, right at 2547, and it just now went out to a low of 2538. Okay, so this is almost like a 19 point, it's a 47 down to 38. It's about a 9-point move here as well, right? So you have a 8-point move here, and you have a 9-point move here. Okay, now not all signals will work. Of course, here you have a signal that you traded through was not good. Okay, so you have your stop losses as well. Currently, you're not stop out. Okay, you're still long. Okay, your stop loss now should be around this level. Okay, so as we move on to these charts, let's have a look at the daily chart as well. Let's see what is the daily chart saying. Okay, basically the daily chart is saying, let's remove this text so that it's easier for you to see. Okay, so what is the daily chart saying? Okay, daily chart, if you look at the trend, okay, let's look at a trend. It's still an uptrend, right? Okay, it's uptrend. So if you on a daily chart, you actually would have bought at these levels right over here. Okay, this level right over here, or even over here, but you should have long even right over here. The most earlier signal is right here, but if you have taken some profits, it's right over here. Okay, so your buy signal is right over here. You have another buy signal over here. Okay, now it's currently in between. Okay, if you you have now 2 signals, you are able to, if it breaks this, it's continuing to go up. If it breaks this, then it's going to turn down. Okay, so these are some of the signals that we are currently seeing, and that's how you trade the fractals. Okay, I'm going to pass back to Tommy. Okay, Tommy, to get to the Q&A. So Tommy, back to you.
Okay, David, thank you. Before we move to the Q&A session, let me share my screen, set up my screen first.
Okay, let me stop sharing.
Yes.
All right.
Okay, thank you for sharing such fruitful material with us, David, and providing solution on how to manage a risk. Before we move on the Q&A session, allow me to briefly explain the trading platform we use and share some exciting promotion exclusively for tonight's webinar. Let me introduce you. Wait, okay, sorry. Probably I got the technical issue. Okay. Okay, here are the key advantages of the trading gold futures product. Okay, this is the number one is a two-way trading transaction. You can trade both direction, whether the market is going up or going down. Get access to the global market products, enjoy the lower transaction cost, no overnight or short fees. Real-time pricing give you up-to-date the market info to track the movement. And the last, high correlation between spot and the futures product. And the next, let's take a closer look at the specification for e-micro gold futures. Previously, David already presented about GC, gold futures, which is a regular product. And my side, I will explain about a little bit for e-micro gold futures contract. The contract just traded is a 10 troy ounce. The initial margin required for one lot is $1,100. The minimum take movement in e-micro gold future is 0.1, value at $1 per tick. This e-micro gold future contract has a last trading date is 3 business days before the active contract month expired. The trading hours for this contract are from 5 a.m. until to 4 a.m. the following day. Here are profit calculation simulation. In the profit calculation simulation, if we open buy position at $24.06 and close it at $25.74.42, the profit obtained is $16.46.6. After deducting the commission of $3.8 per lot per side, the net profit is $16.38.16. Conversely, if the market moves against our position, we will incur a loss plus the commission fee. After understanding the product, let's explore why you should choose Phillip for your trading needs. The number one, we focus the customer focus because we provide tailored education for both beginners and experienced traders, catering to your specific needs. The second one is a seamless onboarding process. Account registration can be completed in under 10 minutes. The third one is powerful trading platform. All product and asset class can be traded on a single platform with charting supported by TradingView. And the last one is we also offer 24-hour dealing support to meet your trading needs. Then for the next, let's take a look at the Phillip Nova 2.0 trading platform. The Phillip Nova 2.0 platform is now available in both desktop and mobile version, allowing you to choose according to your needs. The desktop version, which you can see here, is very user-friendly. You can customize the placement of watch list, charting, and market depth according to your preference. Most importantly, the charting feature is integrated with TradingView, supporting one-click trading. And the mobile version also offers the same functionality as the desktop version, enabling you to use it anytime and anywhere. And now it's time for some good news for you, our promotion. The number one is start your trading journey today. Seize new opportunities by opening an account with us today. Kickstart your trading adventure and gain access to premium tools and resources tailored to support your success. Open your account now and take the initial step towards reaching your financial aspiration. And the next is enjoy competitive trading commission. After we know what the minimum deposit, and we take a look today for you guys enjoy the trading in micro gold future with a super low commission of just $3.8. Take advantage of this opportunity to maximize your trading potential by opening your account now. Enhance your portfolio with a selection of spot product. Open an account today to access diverse spot product and boost your investment opportunities. And what the benefit from you guys if open account with us? Benefit from personalized one-to-one coaching. Start your account today to benefit from exclusive one-to-one coaching, receiving personalized guidance to enhance your trading skill and optimize your strategies. And join our community for exclusive insight and support. Open an account with us today to gain access to our exclusive WhatsApp group. Stay updated with real-time news and insight on our website and social media, and enhance your trading experience. And what the conclusion? The presentation emphasizes the importance of understanding and applying the technical analysis such as Elliott wave theory and fractals when trading CME gold contracts. It highlights the significance of selecting appropriate trading strategies and implementing effective risk management through stop loss techniques to navigate both bullish and bearish market conditions. And now it's time for the Q&A session. David, maybe probably you can on your camera.
Yes, I am back.
Yes.
Yeah.
And you guys, please type your question in the chat box. If you would like to open an account, you can either scan the QR code or visit this link. Okay. And I already got the several question for you, Mr. David.
Oh, fantastic.
Yes. I will read for you.
Okay.
Okay. For the first one, how do you use position sizing to manage risk when trading?
Okay.
Yes.
Position sizing is, of course, one of the most important considerations, so that you don't risk too much of your capital, and you also don't risk too little. Okay, too little risk, then you are actually under optimizing your performance. Okay, so in terms of position sizing, first we need to look at what do you call that? Starting capital. Okay, let's say, for example, you start with $10,000. Okay, so $10,000. Now, every time we trade, just now we talked about it in the stop loss strategy as well. We don't like to risk more than 2 to 5%. Okay, on any one trade. So let's take an easy example. So if let's say, for example, $10,000, 5% is how much? 5% is $500. Okay, so every time we trade, we do not risk more than $500. So if I may be allowed to go back to my chart, okay, just
Yes.
to share with you on my chart. Okay, take over from Tommy. Okay,
Yes.
okay, that's let me show you a window. Okay. I give you a practical example. Okay, so this example is okay. Just hold a minute while I share this. Okay, so let's say, for example, just now we say we don't like to risk more than 500. Okay, so let's say, for example, if we take a 30-minute chart, okay, and then we say right over here, let's say, for example, we have a sell signal right over here. Okay. And we're trading MGC. Let's take, for example, if we're trading MGC at 2556, and this is our stop loss at what is that? Let's see, 63 and 56. Okay, so 56 to 63 is a risk about $7. Okay, so $7 risk times the gold, what do you call that? The MGC is 10 ounces. Okay, so you have basically a 70 US dollars risk right over here. Okay, so how many contracts can you trade if you want to maximize a 5% loss? Okay, so you divide a 500 US dollars by 70 US dollars. So you basically can trade around, I think, if not mistaken, about 3 to 4 contracts. Okay, so that's how you position size. You look at what is the risk between here, okay, and what is the maximum risk per trade. Okay, so then you trade within those number of contracts. Okay, so obviously if you're trading the GC a $6 move on a 100-ounce contract is 600 US dollars. So your maximum risk is 500 US dollars. So that's not a correct contract to trade. So you should be trading a smaller contract like the micro gold. Okay, so that's how you actually calculate your what do you call that? Your position sizing. Okay, so if the risk is more, let's say for example, if the risk is 10 US dollars, is more than 10 US dollars, then you divide that by 50. Okay, so just now my calculation was what, 70 divided by 50. I think is 500 is more than 5 contracts, right? So you divide your risk, your 500, okay, divided by your risk that you are taking right over here. Okay, so in this case it's a $70 risk, then you can divide your 500 by 70. Okay, it's more than 5 contracts. Okay, sorry for the miscalculation just now, right? Yeah, so if it's a $10 risk, then you can trade up to 5 contracts. So I hope that answers the question, Tommy.
Wow, very nice. Thank you for showing the theory and practice together. Will be easier for all of us to understand.
Yes.
Okay, we move to the next question. What do you think of the time trading, and what's the definition of the best time to entry and exit the market?
Okay,
Yeah,
so
yeah.
in terms of trading gold is of course very active during the US hours, right? So during the US hours, that's why I say it's a perfect time to be trading gold. Okay, now what some traders would actually like to trade a trend that is less volatile. Okay, so some traders actually choose the Asian hours as well. Not to say that the Asian hours doesn't have a move, but the move is quite small. But if the moves are quite small, so of course it's not so violent or not so wild, okay? But the movement is slower, okay? So in terms of looking, number one, at what is the time best to trade gold, I think in terms of our timing, Malaysian timing will be somewhere between 6 o'clock in the evening, which will be 5 o'clock Indonesian time, right? Or between 6 to 7, you start to see some action, okay? The London already started trading a few hours before, okay? And the US traders are coming into the picture. So then you can look at for your setup during that time and see whether your fractal is triggered during the active hours. Right, so you look at it, whether you're looking for a shorter term chart, hourly chart, or half an hour chart, okay, around the 6 to 7 o'clock our time and your time around the same, right? That's the time to look for a setup, and you see during the active hours, does it trigger or not? Okay, so I don't know. I hope that answers the question, Tommy.
Yes, but it means we should take the evening time, 6 p.m.
You start get ready during that time. You see whether you have any setups, okay, any fractals that is showing during that time, okay, and then you will look to see whether you trade. So let me look at this example for you, okay. So let's say, for example, you are right over here, okay. Right over here is 5 o'clock Malaysian time, okay, because it's a UTC plus 8. This is 5:30. This is half hour chart. So right over here in the late evening, okay, in the late afternoon, you will see whether there is any fractals. So yes, you have one fractal right over here, right?
Yes.
Okay, and you another fractal right over here. Okay, so right over here, when was this fractal triggered? It was triggered at just now at 9 o'clock my time, which is 8 o'clock Indonesian time. It was triggered. Okay, so in a practical sense, what you do is you have okay, let me show you. Let me first draw it for you so it's easier. So in the 30-minute chart, okay, you have a buy signal actually triggered over here. Sorry about that. Right over here. Horizontally, okay, right over here. Okay, there was a buy signal triggered over here, and then you have a stop loss that you put, either you put here or you put here, okay. Now it's near your stop loss. Okay, so some of you who have a more conservative risk, this risk is 49 and 42, so it's quite a tight stop loss. Okay, so it's a $7 stop loss. Okay, so if it breaks below 42, then you want to be out. Okay, just now it touched. Okay, so if it breaks through, then you should get out. Okay, always always work on it. Obey your stop loss. Okay, don't say, oh, after here I want to adjust down to here. Okay, you need to decide what is your risk. Okay, 38 to 49 is a $9 risk. Okay, here is a smaller risk. Of course, smaller risk you tend to be able to but this is a very important price point as well. You can see right over here, it's a triple bottom right over here as well. Okay, although this is a fractal. So the stop loss must be below the line. It cannot be on the line because it can be a triple bottom, right? So this is your risk. Okay, it's a small risk. In terms of MGC, is 49 to 43 is about 60 US dollar risk. Okay, not very much risk. Okay, but it was triggered a buy right over here. So we have to see later. Okay, you can reference your chart later and see whether how this trade moves. Okay, but this is how you will put the trade. Okay, so at around late afternoon, you look for a setup. Here we have a setup. Okay, and you look for a trigger. Usually, you will trigger during the active hours, and this is where it triggered just now. You make sure you have a stop loss. Your stop loss is either here or here. If you are more conservative, you put here. If you are more aggressive, you put right over here.
Okay.
All right, that's how we practically do it.
Okay.
Back to you, Tommy. Can you see? Can see, right?
Can. Very
All
good.
right.
Okay. And the next question is, I think, relate to the fundamental. Are you okay?
Can. Please stop.
Okay. Yes. What is likely to happen to gold if the Fed cut rates? Is there a connection between the US election and gold prices?
Okay, there is okay, there are two questions there, right? You have the interest rate, right? And you also you have the elections, right? Did you say elections just now? Okay, you have interest rates. Now, okay, in terms of interest rate cuts, if interest rates are going down, okay, then what do you call that? There is a bit of impact on what do you call that? Gold. Okay, gold tends to move, be firmly supported if you cut interest rates. Okay, because what do you call that? Interest rate is something that people, if you are in a high interest rate, okay, you would like to put money into things like bond because the bond will yield you a lot of interest, right? So if interest rates are coming down, then you don't have so much in terms of the yields. Right? So people will move into a different type of asset class. Okay, so gold will react. They will find support in terms of when rates are cutting. Okay, interest going down, then they might find an interest in taking a position in gold. Now, in terms of the US elections, US elections will cause a lot of uncertainty, right? So uncertainty, when people feel uncertain, when things are uncertain, people will buy gold, right? So like in terms of geopolitical risk, like the war, the conflict happening in the Middle East, the conflict happening in Ukraine and in Russia, if this war is going to escalate or become worse, then people become more scared, things become very, very uncertain. Then people will go to gold as a safe haven. Okay, so gold will be very supportive, and that's why you see gold keep going up because of this geopolitical risk. Right. So in terms of the elections now, if things are getting to be very uncertain in terms of the US elections, or you have a president that likely to go to war, then this kind of uncertainties will be very supportive or very bullish factors for gold prices.
Okay.
I hope that helps in the question.
Thank you, David. And for the two last question, okay. If you want to swing trade gold, what the time frame should you use for analyzing gold?
Okay, perfect. Okay, this is a revision. Just now we spoke about it, but let's revise this. In terms of swing trading, we are holding a position for overnight. Okay, maybe one day, maybe 2 days. Okay, or maybe a few weeks for you. If you have made a lot of profits, you can hold for a longer time. Okay, so the minimum time frame you want to look at in terms of swing trading is a 60-minute chart. Okay, so the good guideline is this: if you're looking at 60-minute charts, you're looking for a trend that lasts 20 times the time frame. Okay, that means 60-minute charts, that means 20 hours. Okay, so it's overnight. Okay, so that's the minimum you want to look. Okay, now if you look at the daily chart, then 20 times the daily chart is 20 days, right? 20 days is 4 trading weeks, right? So that's why we say look at the 60-minute chart and also up to a daily chart. Okay, you can look at 2-hour chart, you can look at 4-hour chart as well, but between a hourly and a daily chart, that will be ideal for swing trading. I hope that answers the question.
And the last question for the complete it, how you analyze the market structure using the fractal? Yes.
Okay, so firstly, when you look at the trend, so we started by looking at the trend, okay, whether it's an uptrend or sideways trend or uptrend. Okay, so when the markets are going uptrend, of course, the turning point, you need to identify the turning point, and the fractals also will show you the turning point. Okay, so each of the fractal break on the upside, if it breaks upside on the fractals, continue to break upside, then it's again trading higher highs, right? So that market structure is where it's bullish, okay, and the fractal point is where actually the structure of the market or the trend of market is revealed. Okay, so every time it breaks a fractal, it's basically saying the market is going to be bullish. Okay, if it breaks the down fractal, then the market structure is on the bearish side. I hope that helps.
Okay, thank you. And David, do you have any tips for the beginner or the advanced for the trading goal for the right now?
Okay, for beginners, the first thing is how to become a profitable trader. Okay, so for beginners, just remember that trading is a skill, right? And trading skill you need to practice, right? So for those who were starting out to trade futures, trade on a smaller scale first. Okay, trade also on a demo account if you can. Right? I don't know whether Philip has a demo account. You can test out your trading skills using the demo account. Okay, use some of the ideas that we have learned today using the fractals. Okay, apply those into say a trial account or paper trading account. You test out those theories, and once you get well practiced already, okay, you know how to use it. Okay, you know how to see the trend. Then you go in live and start trading real money. Okay, that would be my best advice for those starting out trading futures.
Okay, thank you. And for now, before I'm closing this webinar, yeah. And finally, for you guys, for the participant or attendees join this webinar, if you don't want to miss the opportunity for the gold trading, please open an account with us. Yeah, you can open your camera and scan the barcode, and you will get the account demo account with us. Okay, and or you can contact us at the 08559906 Okay. Okay, David. The webinar for tonight is already over. Thanks to everyone for attending and to the David Low for joining us. Have a great evening and a restful night. Bye.
Bye-bye. Happy
Bye.
trading.
Happy trading. Thank you.